If you're continuously losing on your breakout setups, I promise you it is not the breakout system that is broken, it's just the areas that you're taking these breakouts at. So in this video, I'm gonna run through the difference between exterior and interior structure and why interior structure is going to yield you a ton more profits when it comes to breakout trading. Make sure you stay to the end of the video and I'm going to give you an access code that gives you a free week in my live trade room so you can watch me execute these same principles live in the markets. So we first need to break down exactly what is an exterior and interior high and low and what are the difference between the two and obviously how you can make money by avoiding exterior highs and lows breaks. What an exterior high and low is just simply concrete structure points. So higher highs, higher lows, and lower highs and lower lows. And then interior structure is everything in between those major structure points. So I'm going to use this arrow to show you guys exactly what we have going on in this particular model. At first, this is our ultimate low, so that's going to be our major structure point, which is a higher low in this instance. And we come all the way up to create some type of exterior high, which is a higher high, okay? Price can only move in two directions, either in the impulsive phase or retracement phase. The impulsive phase is always where you're going to find the structure points, and then the retracement phase where you're always going to find the interior highs and lows, okay? So just to break it down without showing any of these interior highs and lows at all, this is structure within a perfect world, okay? We have this retracement here, then we come up and break new highs. We end up getting retracement here and come up and break new highs. Now I want to dive in what are interior highs and lows. So we know exterior highs and lows are a part of the impulsive phase. Those are part of the biggest price action movements, and they're called higher highs and higher lows in a bullish market and lower highs and lower lows in a bearish market. And everything in between is going to be our interior highs and lows. Within these interior highs and lows, breakout traders have the best probability of hitting their TPs as there is not major liquidity formed at highs and lows that are within major structure. So let me break this down to you a lot simpler. Exterior highs and lows have a lot bigger chance of getting an opposite end reaction once we violate those areas than interior highs and lows do. And the reason for that is exterior highs and lows have a lot more liquidity sitting there than interior highs and lows do. And I'll completely break that down. So I'm going to use this purple arrow here to show you guys exactly what we have going on in this model, and then we'll go ahead and apply this to real charts as well. So very first things first, we're creating that impulsive leg, that higher low and that higher high. From that point, we start the corrective phase where we start to push lower and create our first interior low. These are the points where, again, you can experience a lot less fake outs by taking the breaks within an internal structure versus taking these exterior breaks. We created our first interior low sitting right here, and then after that, we're creating our first interior high. Once we break below this low, of course, if we have other confluences as well, and again, if you want to watch that video exactly how I trade, go ahead and click the link up here. There's a lot higher probability that this trade is going to play out taking this interior structure break than even taking an exterior structure break above highs if the market is bullish. This is the optimal way for you to get retracement trades. Moving on here, we start to create now our second interior low and our second interior high. We come down and create a double bottom here. There's no trades to be taken, but boom, look what happens as soon as we break above this interior high. Again, this is the highest probability setups is by taking interior structure. But after this, once we create this next high and come down to this exterior low, this is more often than not what we can see happen. Price comes down, it grabs all of the stop losses from everybody who bought from this point and immediately gets to opposite end reaction to continue higher. Okay? Now, from this point, this is where people get a bit messed up. Again, there's probably a lot of interior structure here as well. I just want to make a very solid point for you guys as to what happens at these exterior highs and lows. So sitting up here, as soon as we break above this exterior high, this is not the point in which you get into this trade. Okay, you're simply sitting on your hand, waiting for some type of interior structure to form. And then if we break above that interior structure, you can go ahead and take the trade from that point. And I'm going to make an example as to why this right now is interior structure all the way until we retrace 50% of this move. But we'll get into that here in a second. So moving forward here, now we created a new interior low, a new interior high. I will take these trades all day long with further confluence, but I will not ever take exterior highs and lows trades just because of the probabilities. And look what we got going on here. We break above, we have another plus here. If we went ahead and took this trade, it's a solid push up the highs. And then as soon as we get to these exterior highs, the whole point of this is to be able to put our stops to break even once we get up to these points. So when we inevitably get that opposite end reaction, we can go ahead and remove ourselves from the trade and not lose more than we expected to lose. Okay, moving on now, price pushes up and creates a new high. We are never taking that exterior high break, and then boom, we end up retracing. This is still an interior high, and here's the reason why. Until we retrace 50% of this move, this is simply still creating that new higher high structure point. We haven't had a valid retracement yet, and so we don't take these exterior high trades, but once you get that opposite end reaction and price continues higher, as we know, price more often than not goes in the direction of trend. This is the perfect opportunity to go ahead and get in on that same impulsive leg and expect price to create new highs. I still want to bring you guys to a chart to show you one more example, and then again, make sure you stay to the end of the video, and I'm going to give you a 7-day pass so you can watch me execute this on a day-to-day basis for an entire week. Okay, so now we have a price action chart here on NAS. I'm going to show you guys exactly what this looks like on an actual chart. Our structure point is going to be sitting up here. This is our lower high, and our lower low is going to be sitting all the way down here. Okay, these are the areas that we do not want to take trades. Now we're going to run our path just like we did before. We'll make it a purple path and then run through exactly what we would do within this scenario. So price pushes lower, creates lower high and a lower low sitting down here. We end up pushing higher from this point and creating our first interior high. Okay, then from that point we end up pushing lower from that point and creating our first interior low. At this point here, this is when we can potentially start to look at trades if we start to break above this level. And I don't want to crowd the chart, so we'll just put it sitting up here and make that yellow here. Okay? And also sitting down here, more often than not, if we can at least get our stops to break even once we broke below this interior low, we would go ahead and take this trade here. But look what we have going on. You know, if we were to get into this trade here, we're so close to exterior lows that we'd rather just wait for new structure. Wait for price to break below these lows, give us some type of newfound support formed, and then we'll just simply take that newfound support break. It's as simple as that. Now from this point, price pushes all the way up to our first exterior high. But before we get there, we can go ahead and take this trade sitting here at this interior high because we have a good ample room before we come up to these highs. Once we tap above these highs, we still expect price to potentially continue higher, but you protect your position, put your stops to break even. So if we were to reverse, which is what happened right here, we're protected and within the green. You got a lot less fake out areas when we're trading interior structure. So what happens from this point? We end up pushing out. A lot of uneducated breakout traders, this is where they're getting frustrated and getting faked out within the market because they don't understand that that's a major level of liquidity and not an area that you should be taking trades at. Look what happens almost immediately. As soon as we grab all these highs and sitting up here, immediately you get that opposite end reaction and price is pushing down to the races from this point. Now, from this area, we're starting to create interior structure here now, okay? We have interior highs sitting up here. And we have an interior low sitting down here. If we were to break above or below these areas, this will definitely be the place that would be taking the trade. And look what we got going on here. We end up raging sideways for a bit. Once we break below this level, we got a good push to the downside. And same exact thing over and over again. Price is pushing up to create a high. Price is pushing down to create a low. This is pretty choppy price action, so this is when I go to one higher time frame to kind of clean this up a bit, but we can pretty much see the motion from this point. Price is continuing lower. We have a minor retracement here. Price ended up continuing lower again, and then we got down to our next structure, exterior structure point. Before we get down there, let's kind of break down what we had going on here. So interior low was formed here. Interior high was formed here when we got two candle structure. And these are the ample areas that I would definitely take trades if we went ahead and broke out of those levels. Same thing right here. Once we have this interior low formed, this will be a solid trade to take. This is the one out of the 3 trades we've taken here that wouldn't have played out for interior structure. And then we finally come down to ultimate lows sitting down here. A very good visible place for most people to believe that they should be taking a breakout trade. And look what we have happen. Almost immediately, an opposite end reaction pushes the opposite way, removes people's positions, and probably more often than not after this is still going to travel lower because price is more often than not going to go in the direction of trend. But now you guys know to not get faked out once we come to this areas. As scalpers, we simply just wait for newfound support to be formed here. And then once we break yet again back below that major structure point, it's probably a good indication we're going to continue on in that direction. So go ahead and get into the trade. Okay, and that's everything you need to know about exterior and interior highs and lows. Now you understand the point of the most liquidity is usually sitting at structure points, which is higher highs, higher lows, lower highs and lower lows. And that is exterior structure. So instead of taking trades at breakout trades at those areas, wait for new structure once we break beyond, or even better and higher probability, wait for interior structure trades only that go along with your bias. As promised to you guys, I am going to give you a 7-day pass so you can watch me execute these same exact principles for an entire week. Go down to the link in the description to my WAP, use code interior only, and enjoy your introduction into the community. I do tons of giveaways. You guys can communicate with me in these Zooms as well, and I'm just helping you become a better trader day by day by showing you actual data that has worked for me. Make sure you guys subscribe to my channel. I'm doing at least one video every week on education so you can understand exactly how I trade on a day-to-day basis.